game-changing discussions on the big ideas that shape our thinking. This is One-to-One.
Hello and welcome to One-to-One. There are certain industries that operate quietly beneath society's surface, unnoticed when they work, but felt deeply by the public when they fail. My guest today is the Managing Director and Chief Executive Officer of SanlamAllianz Life Insurance Nigeria, part of the Pan-African joint venture combining the operations of Allianz and the Sanlam Group. Tunde Mimiko, welcome to One-to-One.
Thank you very much, Dr. Tokunbo.
Right, fantastic. Thank you for joining us. A real pleasure. Real pleasure. Let's begin by framing our conversation here. This really is not a conversation about selling insurance, is it? It's really about insurance as confidence infrastructure in an unstable society. You are, in my view, a custodian of long-term promises. You're making promises to people in the long term. You literally are selling the future, are you not, in insurance? So let's start with Nigeria. Underinsured, isn't it? Quite volatile economically, sometimes inflationary, distrustful of long-term contracts. Yet life insurance requires long-duration trust, capital discipline, actual honesty, and claims integrity. But before we delve into this, that really is the world that you inhabit. I'd like to learn a bit about you. Who is Tunde Mimiko, and how do you operate in this context that we've just described?
Thank you for having me, Tokunbo. It's my pleasure being here. So, who is Tunde Mimiko? I am a passionate insurance advocate. I say advocate because we need to push the narrative to make sure that we engender growth and development of the insurance space in Nigeria. I've been in the industry now for close to 30 years. I haven't cut my career in both banking and insurance. It'd be a brief stint in the banking industry, but more, I consider myself as a passionate insurance executive that is really interested in making insurance relevant in the financial service space. As you mentioned, it's a tough operating environment for us here in Nigeria. The trust level is very low. Insurance is not something that is easily acceptable to the Nigerian populace and businesses. So we have a work cut out for us to engender trust, to build that discipline that can make us remain as relevant as we should, to become relevant as we should be. We are underperforming now as an industry, and that's why I said I am an insurance advocate. We need to come to the table and see how we can bridge those gaps of underinsurance and the uninsured populace that are deprived of financial services right now.
Yeah, of course. And it's interesting. You said you're underperforming. Of course, not as a business necessarily. You sit at the head of the body that represents a conglomerate. Actually, you talk about underperforming as a sector. Of course, insurance penetration in this country overall is less than 1% of GDP, isn't it? So you describe yourself as an advocate, and that's really interesting to hear. But I'd like to hear about what drew you into insurance. When did you realize actually that it was more than a product business?
That's why I studied in the institution. So met myself in the insurance department of Lagos State Polytechnic back in 1993. And then that's when I got to understand what the course was all about. I've since from there, gone into the space by becoming a fellow of the Insurance Institute of Nigeria, a chartered insurance practitioner in Canada. I'm a member of the Society of Insurance Institutes in Canada as well. So that's how I find myself in insurance. But for me, I put all my heart and passion into everything I do to bring out the success in it. Today, I lead one of the leading brand in the insurance service sector in Nigeria. Absolutely the leading brand in African continent. But yes, notwithstanding our success as SanlamAllianz Nigeria or as SanlamAllianz in Africa, for me, I believe we are underperforming and we can do better than we are doing. Our relevance will not be seen if we are not contributing to the GDP as we should. You did rightly say we are contributing less than 1%. That doesn't show relevance. I'm of the school of thought that Nigeria is even underdeveloped because insurance is not developed.
Interesting concept. Absolutely. So we're starting to zero into the context in which you operate now. Tell me, Tunde, what is the hardest part, therefore, of leading a life insurance company in Nigeria today?
Many parts is, but I'll focus on a few. Insurance in Nigeria is, as you rightly said, is underperforming. Lots of underserved, lots of uninsured individuals out there. The awareness is very low. So the relevance of what we do is only known to a few. When I say a few, maybe insurance practitioners, and just a few out there, even the most literate and most widely read individuals have little knowledge about what insurance is all about. So that keeps me awake at night, say, how do we change the narrative? How do we make people understand the value we bring on the table? How do we also ensure that we create that awareness and are able to impact lives as we should do? How do we make insurance to be seen at work? All right. What do I mean? Fire engulfs the markets, and all we hear is they need the government to assist. A lot of claims are paid in that process, but insurance is never seen at work. Insurance is not seen as part of that economic stability, or will I say social equalizer that it is. So we need to do more as practitioners to bring that to light. And for us at SanlamAllianz, we to place a lot of premium on this, and that's why late last year we launched an insurance awareness campaign, piloting it in Lagos with a view to going around the country to engender this, to enshrine this across the federation. We also are creating that financial inclusion by providing solutions that are tailor-made for individuals and small businesses that can put them back on their feet, should there be a need for that. Our low premium, easy to access insurance solution also ensure that more Nigerians that would before now not have access to insurance services have access to them, and they have this access through digital means, digital platform, allow ease of onboarding. We have one of the largest sales force in the country. We are spread all over the country. Our agents are over 6,000 of them, can also help individuals get onboarded with the agents app that we have. So these are the things that we are doing in our space to ensure that we are able to support the government's campaign for financial inclusion.
Yeah. So coming back to this and talking about how you personally know that your company is not growing recklessly, which of these indicative metrics that we've talked about keeps you awake at night?
I did mention value of new business. Our net promoter score It's also something that's beyond. Year on year on see how that is growing, because it's from Net Promoter Score that you see the impact that you're making, how are customers receiving your service, and how relevant are you in their lives. So that's also a very big metrics that we do measure in terms of the value pillar that are important to the business. So our attributable earnings, of course, is important to the shareholders, because dollar or no currency is there to provide social services. It's all about what return that you can give, and so we want to also optimize return for the shareholders. Employee satisfaction is also very, very dear to my heart, because it is happy employees that will keep the customers happy. So put together that big picture I did mention, having that broad view, that umbrella view of making sure that all the different facets of the business and all the clocks are ticking at the same time is really what is germane and important to me as a CEO.
So in terms of growth and progress of your business, which of these metrics, if it deteriorated quietly over 18 months, for example, would you find hardest to recover from as a business?
It is volume, and volume in terms of new business growth. So we measure what we call annualized premium income, API. So for us, it's a way of also measuring how acceptable our brand and our solution is to show the market. One of the things I also forgot to mention earlier on is our brand equity. How is it resonating with the insuring populace is also important, and all that, of course, affecting not Net Promoter Score, but volume of new business, because it is only a satisfied customer that will recommend or refer their friends or partners or business associates to patronize you. So when that starts going down, it means that accessibility in the market is dwindling, and that's not something.
Absolutely. How about those who cancel their policies before they actually reach maturation? You believe you call your lapse ratios?
Yeah, we do price that into how we do our pricing. You had mentioned how unstable our economy is, the volatility that we also experience, and the inflation rates. That's all this. What it brings to the society is pressure to not see through the long-term commitments, and so yes, that is a pain point in the business to see people, of course, come surrender their policy. But for us, we, as much as possible, cater for that through one, ensuring that we sell correctly to the need of the individual, not for them to believe that this is a saving and they can withdraw at any time. So letting the customer understand what the value they tend to get from it, ensure that it brings down the level of exits before maturity.
Okay, so let's talk properly now about SanlamAllianz. An integration, a merger, really, between two continental giants, the Sanlam Group and Allianz. It sounds very strategic, isn't it? Huge strategic alliance, very, very, very important, and for the business, for the continent, but operationally must have its challenges. Tell me operationally where it hurts. What are the pain points that come from such a significant merger?
Thank you again, Tokunbo. Yeah, we went through that in Nigeria last year, June, precisely, so June 5, where the ground launch here in Lagos when the merger was approved by the regulatory bodies and all authorities involved. And thereafter went back on a roadshow across the Federation. We went to 12 different locations, just again to reinforce the brand, introduce the new brand to our customers and make them understand what value the strategic partnership brings on board. Now, specifically to your question, there's always that apprehension when merger acquisition does happen in terms of from the employees' side of both institutions. What is in it for me? Well, how will I be positioned in this? In terms of cultural alignments, there was a bit of cultural differences, but mostly there were a lot of overlapping cultural and ethical standards between SanlamAllianz. Both institutions place a lot of emphasis on collaboration, on innovation, integrity, and care for all stakeholders. So that wasn't such a big issue in terms of integrating culture, but it is employees making everybody understand that we are not Allianz, or we are not Sanlam, or we are now SanlamAllianz. It's where the pain point really is. That's collaboration that is required with this new entity. Okay, those were the areas that we had a bit of gap, and very quickly as executives, as leadership across the two businesses, we were able to bring that confidence to the employees and allay their fears that we are now one brand and there's no reason for anyone to feel left out and get off that space of I belong to the ex-Sanlam team, I belong to the ex-Allianz team. We are now one team. But that is a thing of the past now, I would say.
But practically speaking, for you as CEO of SanlamAllianz Life Nigeria, what impact did that have on local execution? How, for example, do you align multinational governance expectations with the Nigerian market realities?
The Nigerian market reality seems to be over-exaggerated. It's not as if we in Nigeria are full of unethical practices that doesn't align with best practices.
Absolutely. There's a tension right there.
But I think it's over-exaggerated because there's been a shift. The regulators have been they step up their game to make sure that they ensure good governance, best practices, and businesses are built on a sustainable platform, which is what we also advocate for. So for us as SanlamAllianz, it's, as you've rightly mentioned, belonging to a global multinational institution, I mean, we have no choice than to live those values of good governance, best practice, build businesses on sustainable foundations. So we have a responsibility to also advocate and ensure that the environment we operate in imbibes some of those best practices. And that's what we're doing. And that's why I started by saying, I think the Nigerian insurance space is also well governed. The best practices being enshrined across how we operate. So it's an easy fit, I would say. But there are metrics that we measure that also engenders long-term sustainability that is not being measured generally in the market.
Of course, absolutely. So I'm conscious here of the fact that we are talking I'm speaking with the CEO of SanlamAllianz. We're talking really about best practice. So I'm going to ask you to step out of that a bit. I mean, it's a bit like asking you to step out of your skin, but just for a few minutes, I promise you. Let's talk about that the asset liability, that capital discipline, that duty, that responsibility to invest in long-term assets that will match the timing and currency of future claims. Would you say to me, sitting across the table from me today, that best practice, which of course you practice, is pervasive throughout the industry?
Very correct. You did ask a question there, and there's one of the things that we measure that the industry needs to also place emphasis on: asset liability matching. I missed that out in the metrics that we measure. So it's something that we're big on. We have very savvy actuaries that's all they do. They look at our assets and liabilities and they match them over a long-term period. Is that expertise across the industry?
That's my question.
No, I don't think so. We have struggled as an industry. So even have talents in the actuarial space. So not so many of our contemporaries do have resident actuaries that have the skill and the competence to do asset liability matching. So that's best practice. That's gap is there in terms of building a sustainable business. But there are regulations around actually having actuaries around. Even if you can afford to have a resident actuary, you need to contract it out to a partner that can help measure that. And there are regulatory requirements around how you make your returns, and they're able to see how you're matching your liability with assets. But these are all new developments in the last 2 years. In the past, we've had companies that have been reckless in matching their assets with liability, and that on its own have got their fingers burnt, and of course rub off on the industry very negatively.
So how about pricing honesty? Again, the age-old caveat, I'm not talking about SanlamAllianz. Are we, in your industry, pricing premiums, pricing this risk properly, consistently? Or is there a practice of underpricing to gain market share? How pervasive is that in your industry?
So we're still at that phase where I won't say that it is an industry that is operator-led. It is still reform-led. As a result, you see the regulators step in and say and make some pronouncement around minimum price. Why? Because as an industry, we've not been disciplined enough to price correctly. And so you see the regulators step in so that operators don't run themselves out of business. But we must get to a point where we price accurately and we have that discipline underwriting. I'd mentioned earlier on that point requires that we build data infrastructure that can make us all price from a data point. Okay? Rather than the sign-up pricing that we're doing now.
We need to standardize it.
We need to standardize it. And beyond data infrastructure, there are some digital infrastructures that we also need to collectively build, like they've done in the banking industry, with the NIPS example, so that from such digital infrastructure, you can also see how we're faring in terms of loss ratio. We can use such infrastructure to also manage fraud and have more insight into how to really be disciplined when it comes to underwriting, claims administration, and the value that we provide generally. Today, what we're doing is charge the few that are disciplined more than we should because some are not. So, for example, the regulator said we shouldn't charge less than 6 per mil in the life insurance space. And there are organizations that perhaps the premium should be lower than that, and there are organizations that the premium should be much higher than that, where everybody, more or less, is paying at 6 per mil or being benchmarked at 6 per mil. So you have good risk subsidizing very poor risks. If you look at the motor insurance space as well, where there's been a regulatory intervention as well around pricing, not to be less than 5% for comprehensive insurance. There are individuals out there that have multiple vehicles that do not get out of their garages daily. And there are individuals that plug their vehicles on the regular, and everyone is paying 5%. That, again, does not really follow the principle of insurance, which is you pay a premium that is commensurate to the risk that you bring into the pools, right? The pool risk. That is where we are as an industry. That's why I said it is not operator-led, it is reform-led. All right? But we need to move very quickly to operator-led by ensuring we have that discipline to price well. And that discipline to price well comes from us having the accurate data that can help with the proper price.
So we've highlighted the dismal statistic already, that never mind life insurance, overall insurance penetration in this country is less than 1% of GDP. I'd like to ask you, just hypothetically speaking, if Nigeria were to double life insurance penetration, what do you think would change structurally, fundamentally about this country?
It will transform lives.
Transformative.
So today, a lot of children are out of school, perhaps as a result of the demise of a guardian, of parents that are not there to train them to school. The more households that we insure, the more prosperous this society become, the more the potential of a child is fulfilled and achieved. And we won't be able to measure all this now because there's so many unfulfilled potential in children out there. So that's social good that insurance is supposed to also help out in. Yes, there's a place for the government to put in place social welfare and all that, which I think the government is driving. But insurance also have a responsibility to think about how insurance can be part of the social good and help us have a society that is better for us all to live in. When children fulfill their potential, when people don't feel hopeless, when the financial sponsor, the breadwinner of a home is gone, then we'll have a better society.
Absolutely. Tunde Mimiko, thank you for joining us on One-to-One.
Thank you, folks. It's been a pleasure being here.
Pleasure.